Agradecemos a Gabriela Andrade por esta exposición. Ahora vamos a conocer un poco sobre Reino Unido, cuáles son las políticas públicas de fomento de las fintech. Sabemos que hay un antes y un después del Brexit. Sin embargo, el sector fintech se ha mantenido en auge. Para conocer un poco más de este tema, tenemos como invitado a Rory O'Kane. Él es Fintech Trade and Investment Associate del Departamento de Comercio Internacional de Reino Unido. Un aplauso para él, por favor.
Thank you very much. You all hear me well? I'm very grateful that I can do this in English, and I was even thinking you might need subtitles up there because I've got an Irish accent. But I'll proceed. No. There we go. Okay, so fintech is booming in the UK, and at the Department of International Trade, we are very intent upon supporting UK fintech to expand overseas, but then also to attract fintechs from across the world to set up in the UK. So that's what we do. It's trade and investment, and we champion free trade. So, story so far in fintech, I'm going to go back to 2008, because that was quite a significant year. Things started to really take shape, and try to bring it to the present. Now, there's so much to fit in there, so I'm going to share the perspective of some of the key policies and regulations that are pro-growth in the UK that have helped develop the sector to what it is today. So in terms of the investment even in fintech, which I always think is, you know, a kind of stamp of approval, for every £6 invested around the world in fintech last year, one of those 6 was in the UK. UK only trailed USA and China in terms of attracting investment into their fintech ecosystems. And last time I checked, their populations are significantly bigger than that of the UK. So, with the story of the UK so far, it definitely did not come overnight. Anybody who was watching a certain football match there at Anfield last night, that's an exception of overnight success in the UK. Trust me, I'm an Arsenal fan. I know how it's more of a long road. So, bit of a deep dive here. State of the nation, fintech in the UK. I'm not going to dive into all these here facts and figures. We're going to make them available in another format later. But one key thing to point out there is it's grown to be 76,500 strong in the workforce, and is projected to grow to be over 100,000 by 2030. So the growth is significant, but we do need that talented investment to keep it going and to lay down the right conditions for growth. So, why the UK? Well, first and foremost, I think what has been key has been the regulation, and the regulator there is open to innovation and will support those who are there to deliver customer benefit. That's always got to be key, where the customer benefits at the end of this. FCA and their sister organisation, the Prudential Regulation Authority at the Bank of England, have been very open-minded into accepting new players into the financial scene in the UK. And the government themselves, as I stand here as one of them, we're there, as I say, to set those right conditions for growth. So you've got London as well, which is a financial powerhouse, but it's also a financial capital. Now, when you think about that for a second, you get Frankfurt or New York, they're big financial heavyweights, but London's a financial capital where you can go there and you can go have breakfast with the lawmakers at Westminster, jump in the tube, meet the FCA, find out about the regulation, to stay in touch with that there, and then hop over to Canary Wharf, which is not far away, and see about getting your next round of investment. You can do all of that before lunchtime, all in one day, all in one place. Some people have said it's like Silicon Valley, plus Washington, D.C., plus Wall Street, all in one. So, 2008 was a very important year in the world of finance. And that's right, faster payments was introduced in the UK. Now, we know there was a financial crisis, I know that. But then, at this day and age, internet was really taking off. Nowadays, you know, I'm sure people are probably logging on, doing this and that now. You know, it's there, it's everywhere, and we expect things on demand and so on. So with Faster Payments UK, it was a scheme where initially the tried and trusted incumbents were there to facilitate payments to be made 24/7, 365. Eventually, as I say, with great power, great responsibility, the incumbents were entrusted with that there. But there's been more and more fintechs that have been added to that there. And fast forwarding way ahead, it was only in this recent years where the Bank of England finally let in a non-bank, that being TransferWise, to access the real-time gross settlement system. Now, opening up the infrastructure is important because the big banks, yeah, they're still important instruments of the economy and so on, but we all know they've got the legacy systems and they can be quite bureaucratic and so on. So you've got to have the infrastructure more open to the fintechs to be able to offer these on-demand services. I want to just point out one of the main obvious things how fintech is really taken off is, you can see at the very top one here about the smartphone adoption in the UK over the past 10 years. It's really taken off. And so for fintechs coming into the market, they're able to shape and develop their product or solution for that smartphone, for that main device. That has been quite a challenge, as I say, for those legacy systems of the big incumbent banks. But fintechs have really taken to the new technology. Okay, and just to give a little bit of context of how smartphones are everywhere, I know people here probably think their smartphone's more interesting than me right now, but in the photo there in the Netherlands, for the health and safety of the general public, the traffic light is there at the ground, so when you're staring at your smartphone, you can not get hit by a car. Yeah, what a world we live in, huh? So, I'm here from the government. Tax is important, because that's how I get paid. You know, everybody has to pay their taxes, right? So, 2011, crowdfunding started to take off in the UK. Just going to throw in one other important area that was, an initiative that was introduced was the patent box. So, there were some big innovative firms had left the UK. So, rather than feel sorry for ourselves, we thought, all right, let's provide some kind of incentivization to encourage innovation in the UK, where you then had patent box, okay? And that was for any IP, that was developed in the UK. On those profits, globally, you would pay only 10%. Now, that's almost half of what was the corporation rate there of 19%. And even then, in the G20, that's the lowest. And UK is set to lower it to 17% by 2020. So, I've already heard it already here today, crowdfunding. It's hot. It is hot, and it's coming, it's coming greatly in popularity across Latin America. And rightly so. It's a good way for startups to raise capital. So, what has been quite a catalyst for crowdfunding in the UK has been EIS. That's the Enterprise Investment Scheme. You also then have SEIS, which is a Seed Enterprise Investment Scheme, where it's bigger, 50%. However, I'll focus on the EIS because it's more common, and a lot of the startups who are raising funding at around seed level are kind of doing it for other means, privately and through angels and so on. So, EIS is a lot more popular. So it is a good incentive tax credit. I'm going to give an example here, okay? It's from one of the main crowdfunding platforms, Seeders. I see a startup that I like. I seem to have £20,000. I wish, and I invest that into the startup, buying equity. I receive 30% tax break. Okay, that's a credit of equivalent to £6,000 to get back. And then in this great example, I hold on to my investment. I already get £6,000 back within that tax year. Let that their startup grow, take off. What I have then, it triples in value, £60,000 worth. When you go to sell and you go to cash out, a lot of the times you can get, a big chunk of tax taken out of that. Not the case here. No capital gains tax in that there, so you keep all 60,000 and you're walking away 66. So, but I want to offer, a balanced view of this here. Here's the bad. Startup you invest in, doesn't really grow, doesn't do much. Okay, fine. You still get your £6,000 tax credit, so you're still to the richer of that there, and you sell it, and obviously you're not going to pay any tax upon the sale of that. And to give the full cycle of this here, the very bad, the ugly, okay? So you can invest that 20 grand, and we know not all startups are going to be successes, so This one goes down, complete wipeout, no success. Okay, you still get the £6,000, right? You risked £14,000, yeah? And if you're, well, in that position to invest £20,000 into a startup, you're probably paying the higher rate of income tax, which is 45% in the UK. So you get the relief in that, and all in all, it means that your loss is reduced to, well, it's just under 30% of that, it's 7,700, which is not bad considered you bet on a horse that didn't even get to the finish line. So, fast forward and yet again with crowdfunding, okay? It has been very successful in the UK, and as was the case for Monzo last year, they became a unicorn of that status of over 1 billion through a successful crowdfunding campaign. Even within the first 20 minutes, I believe, they raised £1 million. So it was, you know, not even overnight success. It was a 20-minute success for them to raise that kind of capital. Then also in Cedars, you had Revolut, and they reached their unicorn status by getting over the line with a very successful crowdfunding campaign. One other thing that is very interesting upon Cedars is, you know, it can take time for these companies to grow to such stage, and not everybody's going to IPO. So with Cedars, they offer a secondary market where, say, 6-8 months later, you get in a bit of a situation, you want to cash in on your investment, you can on Cedars. So that's very important too, to give that access. Now, going into another area, we're at 2014, 6 years after the crash. Prior to the crash, there was 71% of the bank accounts held by the big five here, okay? They still had a big significant share. 2014, they had 85%. So strangely, despite the discontent and even distrust that you'd have in the big five traditional banks, what you have there in the UK's case, people still thought, you know, okay, I'll stick with them. And then, but the result being, they didn't have enough competition. You know, they weren't really, you know, they were sitting there quite pretty in that position. And something had to be done. The CMA, that is the Competitions and Markets Authority, launched full-scale inquiry into this here, seeing how they could stimulate the banking sector for retail customers and then also small businesses. The result of that report has then paved the way for what is open banking, though I'm not going to try to say much about open banking here because we've got one of the chief architects here today. Carlos is going to be talking to us this afternoon. So, that was in 2014. On to the main part here about the regulation. 2013, just rewinding a little bit, the CMA, yet again, stepping in, you know, they gave a competition mandate to the FCA. Then also, with competition and within their mandate, they also set out with Project Innovate the next year. So their central focus was competition and innovation. So upon setting up Project Innovate, they also set up the advice unit because they have a clear communication strategy there with the startups who are looking to get onto the financial sector is very important, and it's been one of the secrets of the FCA's success. So with the advice unit there, startups that apply can get a caseworker, and then they can be guided through the regulatory process because it can be complex, okay? And then Project Innovate, one of their key achievements to date has been 2016, the Sandbox. I've heard about it today, and Sandbox is becoming really popular. It started in the UK. And, you know, it has proved to be a great mechanism to help keep, you know, regulation and innovation in touch and distance. And yeah, it helps to get startups closer to the market, and they can access investment along the way and access a limited pool of customers. But there's two other observations I think that are very key about the Sandbox is it gives that, you know, space for observation for the regulator to see some areas where their policy might not, you know, be at the right point yet. So they can, you know, it can feed in and it can help develop their policy of tomorrow where they're seeing certain innovative solutions that can deliver customer benefit. And then also what's key, we're in the times now of more fintechs and banks are collaborating and partnering. So there you have it, the sandbox. That is a great time when they can come together and partner within producing a particular solution in the sandbox. So, going ahead, 2014, 2016, we saw there earlier that there was a lack of competition in the whole banking sector, particularly, as I say, for retail customers and business banking. So they launched the new bank startup unit, and that was a joint venture through Bank of England, Prudential Regulation Authority, and FCA. Now, similar again, it's all about, for those new applicants, the innovators coming in, you've got to have that dialogue with them, and you have to be supportive. But the central rule book to be in a bank, it's the same. It was very, very much the same. They weren't going to relax the rules or anything. That would just be corrosive towards the whole morale in the system. But you can help them to get there, if they're going to deliver benefit to the consumer. So what they did there was, yes, they lowered the minimal capital requirement. And then for anybody that, of an aspiring challenger neobank that met the criteria, they would then get a caseworker to help guide them through the application process. It's worth noting, though, that there weren't any new banks for years upon years. And as I say, there was a big five dominating the market, so the conditions were just right. You couldn't have this, per se, in the likes of USA, because I think there's something like nearly 5,000 banks, so it's probably over-fragmented. So, it's not a one-size-fits-all of some of these here cases. Another important area, as I say, people still were, trusting in the traditional financial institutions. And it was quite a concern whenever, as it was recorded at the time, 70% of applicants for business credit, small business banking, they would just go to one institution, and that'd be that. And then of the 40% that get rejected, they just think that's a stamp of shame. I can't access this, credit for my business. I have to limit my growth. No more. Sometimes you got to have these top-down initiatives to stimulate that competition in the market. And that's how what was launched was the bank referral scheme, where banks that reject small businesses are then obligated to put them onto a referral scheme where there were alternative lenders there. So, getting into my area, international trade, one thing that stood out around the world is fintech's taken to be quite international, is collaboration between jurisdictions. And fintech bridges has been quite popular with that. We believe it started in the UK. We had our first fintech bridge in 2015. It was signed then with Singapore, and then they followed with South Korea, Hong Kong, China, and then the last one there last year was Australia. These are setting out means of, like a framework of collaboration between big priority markets. UK is quite a lucrative market, but it's still 66 million people, whilst these here were considered priority markets. Now, each bridge agreement is quite bespoke, as it is, because each market, can vary. But the general framework of them is here. It's government to government, regulator, and ecosystem bridging. I'll go into a little bit of detail on each. So government to government cooperation, as I say, is to discuss areas for policy development, and it's identify the opportunities for harmonizing their international standards. You have to remember, with finance and the regulation and the legislation that goes around it, it's a sensitive area. So it's going to be quite complex. And then for any fintech to think about going overseas, it can be quite a big challenge, and sometimes it's just too great in areas. So the closer we can get towards harmonizing some of these here standards and policies, it's going to be for the better, where fintechs can go internationally and offer their product or solution to customers. What I think is actually the central pillar to all this here is the regulatory cooperation. And that's regulator to regulator dialogue. Now, as I say, fintech is exposed to a lot of regulation because, you've got an app and you're playing with people's money. In some senses, how people can view it. So, and regulators often, they don't always talk to each other, They will go off and do what's their version of protecting the consumer and, all in their interests for the financial sector. That's fine. However, you have now, with the regulator cooperation, they're going to share what they've learned, with each other, and then they can develop areas where they can collaborate. But then for the fintech themselves, what is very important is the referral scheme. So, for example, a UK fintech that is authorized by the FCA can then go to Singapore and, through being approved of FCA and having that referral, then they jump over the initial stages of regulatory authorization in Singapore, and then as it can be for the likes of Australia or South Korea. Now, for any fintechs in the room, they know that it's going to be a costly process upon going to another new market and to hit the ground and go through all these all these procedures before they can actually make money. Because they're startups, they're still young and they're time poor and they're dependent upon every penny of their capital. So that's been key too. And then ecosystem bridging is another area where we have to open this up more. But a good example of that could be accelerator to accelerator. So you could have an accelerator in Hong Kong and one in, say, London, and they set up an MOU to facilitate the flow of startups from both jurisdictions, where it can be a set landing package to help it be a soft landing for those companies landing in either jurisdiction. So at the DIT, just last week there, we had UK Fintech Week. My God, what a week that was. We even had launched what is now our Fintech Bridges cohorts to Hong Kong and to Australia. I believe we've got Invest Hong Kong somewhere in the room here. Yes, yeah. They're a tried and trusted partner of the DIT. And I'll just give a brief explanation of the cohorts. What we're doing there is, one of my colleagues has recruited 10 companies from the UK fintech ecosystem to then they will receive mentorship, from tried and trusted, fintechs from, say, Hong Kong, or people that have done business there to help, coach them towards being ready for that market. They'll set up a tailored package for each of those fintechs of the meetings with the regulator and with other financial institutions who could be their key customers there. And they'll cap this all off at the end of that there by taking them over to exhibit at, I believe it's going to be at the Hong Kong Fintech Week. Yeah, that's going to be quite a week. And they're doing the same for Australia. So, this is helping to internationalize UK Fintech. And we had one of our ministers launch this at Mansion House, the home of the Lord Mayor of London there last week, UK Fintech Week. We also then had launched our State of the Nation report, which is going to be available later today. My colleagues here at the embassy, it's going to be a lot more insight, probably a lot more interested in all that I've told you, and you can read it in your own time. It's about the UK ecosystem as a whole. So we've actually done quite well here. Kept it within time, keep everything flowing. Good. And I hope I've offered some insight about, how the UK has grown to where it is today. It wasn't just sitting on top of a big, healthy, financial services sector. And it was through setting those right conditions and supporting startups in their journey to offer their products and solutions to the market. So, in the UK itself, it's a place where people come to do business, and the ease of doing business is ranked, it's one of the best in the world. Also, you've got the robust rule of the law, I was even speaking to a lawyer there last week, and he says he gets a lot of business of Russian couples coming to London to seal their divorce because the UK legal system is that great and gives them, I don't know, a get-out-of-jail-free card for that there. Now, but finishing off then, as I say, look, the UK has set those conditions for the growth and so on, and the investment comes in, and then money follows money. But at the end of the day, too, it's not the government, it's not really the regulator, it's the entrepreneurs that come there, get on the playing field and make these things happen. It's them who's really making the difference. So just to cap it all off, the UK has become a global leader, but not by default, it's by design. Thank you very much.